Don't be confused. It's a brand new segment. It's called Wall Street Week Daily. And the host of that show, David Westin, joins us right now. And David, we plan to do this every day, and you certainly picked a very interesting day to launch this.
Yeah, I picked it on purpose. Thank you so much for having us here. It's really good of you, Romaine. Yeah, we're going to do this. It's Wall Street Week. We try to address the long-term, sophisticated, smart investor and talk about what's important to them. And that investor has a few things on his or her mind today.
And every week on Wall Street Week, you would just have a great sort of lineup of guests, including a few regulars. Of course, we always hear from Larry Summers. I know he's a favorite of yours, but quite a few other folks as well.
And you know who else is a regular?
Who's that?
Steve Rattner, right here. He's the chairman and the CEO of Willett Advisors, which of course manages the personal and philanthropic funds of Michael R. Bloomberg, the founder and majority shareholder of Bloomberg LP. Steve, thanks so much for being our first guest here.
Thank you for having me as your first guest. I'm honored.
So the question, I think on many people's mind is, as somebody who's responsible for a lot of money being invested, when you wake up this morning, what are you looking at? I mean, what are you most concerned about? What are you focused on right now?
Well, look, we're obviously looking at both risks and opportunities. Where might we be at risk, and what might the opportunities be here? I think my experience when you have these kinds of shocks, and this is obviously a shock, is most investors, including ourselves, tend to be cautious and step back and wait until the dust settles a little bit before we do much. Now, we've heard from lots of people with ideas about this and that, but I think at the moment we want to see what happens, and particularly, as you referenced earlier, the question of contagion. I think that is the big question on everybody's mind at this moment.
How are you going to figure out the answer to that question? What are you looking at? What's on the dashboard to say, yes, we think there is contagion, or no, there isn't?
What you're looking at, I think, is what happens to deposits at a lot of these other banks that are in the crosshairs, the First Republics of the world, the PacWest Bancorps of the world, some of the others. And some of it's anecdotal. I talked to one person today who's been in touch with a number of the next rung down of super regionals who said there hasn't been much of a flight of deposits, but I think that's what we have to watch for over the next few days.
How important is it right now, the communication coming out of the government, meaning the regulators, to reassure people that A, their money is safe, and more importantly, that they'll try to prevent something like this from happening again?
Well, you certainly saw the president try to do that this morning, and the fact that he went on at 9 o'clock in the morning, which is not a normal time for a presidential statement, I think told you that they're trying to make sure people are reassured. The problem is, and I don't think it's a fatal problem, but as you know, the ability for the government to guarantee all deposits waned in about 2012, I believe, and so there's a lot of moral reassurance and a lot of, watch us by example, we just saved the depositors of 2 banks, but they can't just come out and guarantee all the deposits.
Biden tried to make a very clear distinction between saving the depositors versus saving the investors. There is a lot of discussion here about moral hazard, and I guess we've had this discussion before.
Look, the politics of this are toxic.
Yeah.
There's no question about that. Elizabeth Warren already has an op-ed piece out on the Times website talking about how it's a failure of regulation from this 2155 bill that was passed a couple of years ago. I think the distinction the administration is making is the right one. We're not saving the shareholders, not saving any subordinated or unsecured creditors of this bank, but depositors, when they put their money into a bank, they have a right, and the system only works if they feel their money will be secure. And so I think one of the things that has to come out of this is looking at a system, and there are ideas floating around for how we could prudently and fairly guarantee all deposits, not just the small under $250,000 savers.
So Steve, it's too soon to know how the dust's going to settle, but at the same time, what does this potentially mean for small and regional banks as opposed to the big banks? It looks like the places are really fleeing to the big money center banks.
And that's not a good outcome from this. We don't want to be a country of 4 banks, and we are in this weird situation now where, to Romaine's question, the only 4 banks that we know are completely 100% safe and secure are the 4 biggest SIFIs, right, the systematically important banks. And so we have to do something to make sure people still have confidence in these regional banks, because we want a broad banking system. And that is exactly what this 2155 bill tried to do, was give them a little bit more regulatory freedom so they could compete more effectively.
Steve, I'm interested, again, from your point of view, overseeing a very large portfolio. Time horizon. When you address something like this, how much of it is, I'm worried about the next month, 6 months, or this is what I should be thinking for 5, 6, 7 years?
We worry about both. We're not a short-term trading operation. We're a long-term investing operation. So for us, it's not so much like, is this a good, quick trade? It's more, is this the right point of entry? Are things going to get cheaper? Am I going to lose all my money in an instant if one of these banks closes up? But we look at this over a period of time, is certainly the way we think about it. Other people are more in the short-term trading business. That's not ours.
But you've had a front row seat to a couple of different financial crises, including the biggest, at least in our lifetimes here. And I am curious as to whether the role of the government, not necessarily in the bailout itself, but I guess the regulations and their hand leading up to it may actually be a contributor to some of these issues.
So 2 points on that, Romaine. First, I think we need to make a distinction between this and 2008. This is very different than 2008. 2008, we had a broken, over-leveraged, badly regulated, non-transparent financial system. We've made a lot of progress since then. This is the problem of a few banks that just went off the rails. In terms of the regulatory oversight, yeah, I think there are a lot of groups and entities that are going to have to account for themselves. The regulators, where were they? This stuff, by the way, was hiding in plain sight. If you look at SVB's balance sheet, you will see at the end of 2022, they made clear that they had potential mark-to-market losses on this portfolio exactly equal to their equity. And so, in effect, you could have made an argument they had no equity. But there are Wall Street analysts who are out there recommending this stock just a few months ago. The financial press, I mean, you can look at the buy-side community. Everybody seems to have just completely missed this problem.
Steve, as I say, it'll take some time to sort it out. But I wonder, preliminarily, you've said on Wall Street Week before, equities are not so attractive right now because you think rates are going to have to keep going higher. And by definition, that discounts the future flow of income. But are you rethinking that at all? Because right now the markets are saying, you know what, the Fed is not going to be able to go as high or stay as long.
I think it's too soon to have a judgment on that. The Fed meeting is 9 days away. That isn't that long of a time either. But I don't think at this moment probably Jay Powell even knows what it is he wants to recommend a week from Wednesday. I think that you have to see how the dust settles. If you ask me right this moment, what do I think will happen? I guess they'll do 25 basis points to show they're still fighting inflation, but they're not going to put any more undue pressure on the financial system. They want to recognize that too. But it's a long time away, frankly, in the great scheme of this.
Even without knowing exactly what they are going to do, we do know that at the end of that meeting, you're still going to have interest rates above 4%, maybe even 5%. Inflation still tracking around 6%. As an investor, how much of that has changed your longer-term strategy, particularly when it comes to financing your investments?
We have some concerns about the longer-term outlook. And again, I don't think we know how the dust will settle. You could imagine this causing a pullback on the part of consumers, on the part of business. Everybody kind of stops a little bit. You can imagine it being a pullback on the part of banks, worrying about protecting their existing assets. I don't think we know yet. I think it certainly, if it tilts one way, it tilts towards a slower economy rather than a faster one. And that obviously has implications for investors. But I think it's all too soon on Monday after this incredible weekend.
I know you're going to say you don't want to second guess the Fed, but I'm going to ask you to nonetheless. Did they go too far too fast? Most people think they waited too long. But once they got started, did they go too far too fast? They went really far, really fast.
No, I don't think so, David. I would second guess the Fed if I thought they deserved it in this case. But I think they had to do what they had to do. As you say, they waited too long, and that made this less than desirable. But the fact is they telegraphed so clearly to the market what they were doing, where they were going. And so it really was on these bank CEOs to say to themselves, wait a minute, we've got this portfolio of all these long-dated treasuries that are suddenly going to be worth less than we thought they were going to be worth. And what are the implications of that for our interest rate spreads, for our liquidity if depositors want to take their money out? And they were just asleep at the switch.
Last one, unfair. Was this inevitable? When we put this much cash into the global system, both fiscal and monetary, once you start taking it out, it's going to have real effects, and it's been there for a long time.
I don't think it was inevitable because there are thousands of banks in this country, and 98% of them are okay because they ran a more prudent balance sheet. They were more careful. You know, as you know, it's been so widely reported, SVB had these huge inflows of deposits. They didn't really know what to do with them. They went out and they bought long-term treasuries to make a few more basis points, and that was, in retrospect, incredibly stupid.